Hello everyone, this is Red with RedDragonLeo.com. It is Tuesday, February the 8th, I believe, 2013. Looks like we are still in a choppy move higher here. I don't see any reason to think that we're going to sell off just yet. I know this is very frustrating for all of you bears out there because they always seem to push this market up higher than we really expect them to do. But before we get into that, I wanted to welcome Allie back, my 30-something-year-old friend who is a teacher in Tehran, Iran. And he teaches sacred geometry, I'm sure English probably as well. I'm sure he also teaches simple math as well. So there's a teacher over there. If I'm wrong, Allie, I do apologize, but I know that you had told me you were a teacher. And very, very nice guy, very knowledgeable in this area of sacred geometry and cycle work and these laws of harmonics that he speaks of here in this post. This is his post. I did want to go over it with you and kind of hopefully answer some of these questions. I've read it myself. I'm learning this as well myself. And this is stuff that I guess you could say not even these gangster Illuminati reptilians have the ability to stop, at least not on the bigger time frame cycles, because we go through these cycles based upon a certain percentage of the prior cycle. And he explains it, and he basically calls them octaves, octaves of dimensions. But there's nothing in this world that is a straight line. In space or, in Earth, everything goes in some type of curves. Like he's just got some kind of picture here. So, I'm going to let you read it. I will go over it as best of what I could understand right here. And these do, re, mi, fa, sol, la, ti. I want to say that song. I want to sing that song. What is that song? Do, re, mi, fa. Anyway, something stuck in my head from being a kid, but now forget it. But anyway, one of the things that he's done here is that as you step up from each one of these vibrations, as they increase, the ratio increases. And we see this in the stock market as it extends out over a time period, over the weeks and months and years that go by. It goes by a different factor forward for significant highs and significant lows in the market. And so when you look at it like this, if you started off with a value of 1, then the next value would increase by 1/8, which means it would actually increase by 1.125. And then the next one would go a quarter, a third, a half, a 2/3, 7/8, all the way up to, all the way up to 2, I guess. So it does exactly the same on the way down as it goes by 15, 16, 5, 6, 3/4. I know this is complicated and I'm not explaining it real well, so it's best just to read his charts there to get a better idea of it. But what is basically meaning in the simplest terms is if you time any point from like this point here, it says 15-week musical fifth and 30-week octave. That is obviously a multiple of 2. And in here in these shorter time periods, there's going to be other multiples in here of smaller time frames, which would be like what we just said here. There would be a multiple of 1.125. 1.25, 1.33. These are possible and likely turn periods in the market Obviously, on the smaller time frames, they might not be a very big turn if a larger time frame is more powerful and overwhelming it, you might say. And I guess I should reword that as to not time frame, but a larger vibrational octave is I guess what he is calling these octaves. So these periods of time that make up these octaves, there are larger scale ones and smaller scale ones, and it is very similar to what we look at for the what I look at for the MACDs, the histogram bars, the overbought and oversold on the smaller time frames, working your way up to the bigger time frames. And as a bigger time frame, like a weekly and a daily, is in a bearish mode, then even if a 60-minute chart or a 15-minute chart goes bullish, it doesn't have the strength to overwhelm or fight the overpowering daily and weekly that might be just the opposite and pushing down. So it's the same thing with these octave moves, where you can pinpoint a day in the future using these multiples of where we could see a possible move, a turn at least. If there is a larger time frame that is not ready to turn yet and still in a bullish or bearish mode, then the smaller multiples can just simply be passed right back up, and you would just see maybe a one-day turn in the market and then a turn go back and go whatever direction it was previously going. So I know it's probably confusion here, but I'm open to learn new things. I mean, you look at the name of this blog, Stock Market Trading on the Dark Side. So this is obviously something that is not looked at by the average Joe Schmo out there, who I guess has a new TV show, a reality show that's fiction. But I thought all reality shows were fiction. Don't they all have actors on it? To my knowledge, science fiction is the only thing that is actually real, and regular reality programs are what is fiction. Everything's backwards in this world, folks, just to let you know. So anyway, moving on here, and I will let you go through here, and you can certainly email Allie to try to get some better explanations than I could. But if I just read this for you, you can see basically saying that as you see, if you measure the high of September 2001 to the high of November 2011, the fundamental tone is 10 weeks. Obviously, I would call that, a time period, and he's calling it a fundamental tone. So it's just something different than what we use in the market, but it is something that is still very accurate, and I absolutely believe the Illuminati know this, and they use it to their advantage, especially the large time frame. The smaller ones they probably just manipulate their way out of, but the larger ones they don't really have a chance. But anyway, it's 10 weeks, so when you multiply it by the musical fifth ratio of 3 to 2. Now, don't ask me how he come up with the 3 to 2 ratio. Something you have to ask him. Or the factor of 1.5, you'll get 15 weeks. If it's the high of February 2012. And then if you multiply that octave by 2, so you're going of a ratio of 1, then 1.5, and then 2. These octaves. You'll get 30 weeks. So this is the beginning of the spiral with a combination of both positive and negative energy. Now, when we look at this positive and negative energy, we're looking at basically highs and lows. I'm backwards than most people, I guess, because I look at when the market is actually selling off, that's positive, because I'm a big bear. But I guess the average person will look at that as negative. And, they look at the bull market going up as positive. I look at that as negative because it's a lie, it's artificially inflated, it's not real. But anyway, so the process goes on until it completes the octave and the midtones described in the fractals. Obviously, the midtones are what we call the shorter time frames. The charts that, like the 15-minute chart, the 60-minute chart, 2-hour chart versus the daily, hourly, and monthly. Daily, weekly, and monthly. So and that's the way I'm kind of rationalizing this in my head. So I'm learning this just beside you, along with you, learning this from Al. So you can email him right here at rockandmail.com. I don't like to put it completely spelled out, or I mean with the @ sign and the dot sign, because spam filters will scrape your email whenever you post it anywhere. Then you'll get lots of junk email. I already get enough as it is, but I try to cut down as much as possible. So anyway, and now the more important thing here is, as you see, we've got 16 months between the low of March 2009 and the low of July 2010. Now, if you now let's take this as a fundamental vibration, or 11 times 1.5 musical fifths equals 16.5. Now, again, I'm not sure where he's putting his starting point to come up with these, so that's something you have to ask him, and feel free to email him. He welcomes that. So, and it says, as I stated earlier, every movement of energy generates opposing movements of energy or polar opposites. So every big bull market, there's a bear market. Every bear market, there's a bull market. Yin yang, good guys, bad guys. Unfortunately, we can't get rid of all the bad guys and just have just good guys, because there has to be an opposite, a negative to the positive. So, sadly, but certainly I would be a much happier person if we just at least all arrest them and throw them in a big prison cell and let them be negative there. Actually, let's just get them off the planet and send them to Mars or something. But anyway, it's another story. So, so now the reversal of this move of 11 times 1.5 equals 16.5 is 11 months. The move between the low of July the 2010 and the high of May 2011. It's a counterclockwise move. Now, again, I read this and reread it, and it still doesn't quite sink in yet. Maybe I'll get it over time. So I hope you guys are enjoying this education and this opportunity to expand your mind with something that is not talked about, and I'm told that is of the big secret inside the Freemasons, the 33-degree Freemasons. That they know about this, but they don't like to tell you. So I'm told that. So now you're learning a little bit about it. So you see the move, or the move between the May high and the beginning of the down move in October 2012. Therefore, the octave will have to complete. So you multiply 16 months by 2 octaves, and you'll get 32 months. Now count the months on the low of July the 2010, and you'll reach the low in 2013. Now, don't ask me exactly how I understand this, because this is confusing me more as I read it. I actually understood it when I was actually editing this, because he just sent me the raw text here, and I had to go in here and type it up for him. I mean, it's already typed, but I had to, correct it and do the spell check, stuff like that. Anyway, so he supposes the closest date at the bottom would be February the 25th. And and also the cycle will shift into a high. The cycle will shift into a high in October 2012. Obviously, it needs to be corrected, but you get it, because 2012 is gone now. And a higher high, or chop sideways move, into August of 2013. And how you ask somebody to do the math? 15 times 1.5 equals 22.5, which makes the closest date of August the 19th, 2013. So this is where we're coming, or this is where Ali is coming up with a final high in the market. It's somewhere around that date. Obviously, it could be some days off. So we'll look for a ritual date in that time period. Obviously, the 22nd is a daily ritual because it's a 22. The other ritual dates there would be the 26th and the 17th and the 8th. So I'm going to do another video for technical analysis. This video is just based upon going over Ali's stuff, but I'm going to do my part here in a separate video. So just take the time to email Ali and comment on the blog, and stay watching it as we make new comments about the predicted high of this coming week. So thanks again, and Allie, thanks you very much as well.